This is the financial accounting of the foundation level, which was done in 18 August 2025. It was tested by Casinem. And the first question, A, explain two acceptable methods of valuing goodwill for accounting purposes. B, describe three distinguishing features between a receipt and a payment account and income and expenditure account. C, required the adjusted cash book and the bank reconciliation statement as at 30th June 2025. Then we have question 2. Highlight two characteristics of accounting principles. Explain three differences between the direct and indirect methods of presentation of the statement of cash flows. C. Required bad debts account for the 3 years, allowance for creditors account for the 3 years, an extract of the statement of profit or loss for each year. Question 3. This is a question on partnership. Required statement of profit or loss for the period ended 30th June 2025 and statement of financial position as at 30th June 2025. Question 4. Required statement of profit or loss for the year ended 30th December 2025 and 31st December 2024. And then statement of financial position as at 31st December 2024. Question 5a. Explain the following types of errors: compensating errors and error of complete reversal of entry. B is a question on cash flow. Required statement of cash flows for the year ended 30th June 2025 in accordance with International Accounting Standard IAS 7 statement of cash flows. Let us go to the answers. These are the methods of valuing goodwill. Then we have part B, three distinguishing features between receipt and payment account. We have the differences. Then part C, we have the adjusted cash book for Mark and Company. Then we have our working one there, and then we have the bank reconciliation statement. From there, we go to question 2. We have the two characteristics of accounting principle. Then part B, we have the three differences between direct and indirect method of presentation of the statement of cash flow. And then C, we have the bad debt account for the year ended December 2022, 2023, and 2024. Then we have Roman 2, the allowance for creditors account for the 3 years. So this is the allowance for the creditors account. Then we have a working one. This is just determining the increase in allowance for creditors in 2023, and in 2024 it was a decrease. Remember how we account for both increase in allowance and decrease in allowance. Then we have the extract of the statement of profit or loss for the 3-year ended that 1st December 2022, 2023, and 2024. Decrease in allowance for creditors. It is usually indicated in the other incomes. Then we have expenses, we have bad debt, and increase in allowance for credit loss. Then we go to question 3, the statement of profit or loss for this partner, Anita, Bansi, and Carlo. So it is divided into this is a period before Anita was admitted as a partner, and this is a period after Anita was admitted, and then we have the total. Then we have the appropriations. Remember your appropriate partner salary, interest on capital, and then the residual profit. Then we have working one of the apportionment of sale and cost of sale. The sale in the first, before Carl was admitted, we were told that the sale was a third of the total sale. And then after admission of Carol, that is when they made the two-third of the sale. And also the cost of sale. The cost of sale are the opening inventory and the purchases and the closing inventory. So this is how they have been apportioned. And after apportionment, they are indicated here. Then also the expenses have been apportioned in the working two insurance. The expenses have been apportioned according to the time period. So this is 5 months out of 12 months. This is insurance. So this is what was paid, and this is the accrued insurance. Also rent and rates, they have been apportioned according to time period. This is what was paid, and then this is the accrued. Wages and salary apportioned according to time. Bad debts apportioned according to time. Then we have depreciation. So this is the total depreciation. Then the depreciation apportioned according to time before car was admitted. Then this is the depreciation of motor vehicle, which was brought in by Carlo. And then depreciation now after car was admitted. So have 7 out of 12 times 12 funded. So this is the depreciation before she was admitted. And then this is the depreciation of the motor vehicle introduced by Carol. Then we have accumulated depreciation. So this is to be used in the statement of financial position. Then we have depreciation of equipment. So this is the cost minus accumulated depreciation, because here we are using the reducing balance method. So the total depreciation is this one, and then it is apportioned according to time. Then total accumulated depreciation of equipment to be used in the statement of financial position. Then we have working for Carol's salary for the 7 month. This was her salary for the whole year. So for the 7 month, you apportion according to time to get 840. Then we have working 5 for the capital account. Then share of goodwill, and then the goodwill is written off. Then the interest on capital for the first 5 months, and then for the 7 month now. Then we have working 6, the share of residual profit. And then we have working 7, their current accounts. And then we have working 8, this is just adding motor vehicle, which was brought in by Carol. And then from there, we have the statement of financial position. The statement of financial position of the 3 partners. We have non-current asset, current assets. Then we have their capital account and the current account. Then you have current liabilities. Good question 4. Hesbon Mwatate, statement of profit or loss for the year ended 31st December 2023 and 2024. We have the sales, then we have the opening inventory in working 2, purchases, drawings, then the expenses are divided by 2 to get the expenses for 2023 and 2024 because we were told that they were the expenses incurred in both years were equal. We have working 1 for purchases in 2024. Then we have working 2 for the closing inventory. Then we have working 3, the bank account. And then from there we have the statement of financial position. The statement of financial position. Then from there we have question 5, the types of error, compensating error, and then error of complete, reversal of entry. And then we have B, the statement of cash flow. So profit before tax was not given, so you have to do it in working 1. So here you have working 1, working 2, working 3, working 4, up to working 5, and that marks the end of this presentation. If you want the combined PDF from 2015 to 2025, download it at 100 in the comment section below.